Good morning, traders. It is Monday, the 30th of July, 2018. It's 8 a.m. Chicago time. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Hopefully, you're hearing me loud and clear. This morning, we're looking at a market that is attempting to recover from Friday's sell-off. Crude oil leading the pack, crude oil taking a strong move up this morning, pushing above Friday's range. One second. That's the leader for today. We have a mixed bag coming into today. The S&P is just slightly lower than where it was on Friday, just by a tick or so. We do have some indices that are down. We have indices that are up. The euro is up 410 pips at 117,400. So overall, it just looks like rattling sound. Okay, hang on 1 second. All right, how is that? That should be better, right? Such a pain. Anyway, let's just take a moment to look at, as I said, the stance this morning in terms of risk sentiment is mixed. Looking at the week, though, just to keep an eye on the ball, we're looking at a fairly busy week release-wise. Not much left for today, but this week we're getting the big piece is the FOMC rate on Wednesday. We also get unemployment on Friday. Remember, these are the last couple of days of July, and we're coming into the first Friday of August, which brings non-farm payrolls. So Wednesday, FOMC rate. Tomorrow, Tuesday, we get a bunch of stuff out of Europe, German retail sales, unemployment, Euro zone CPI, GDP, U.S. income, PCE core, S&P Case-Shiller, Chicago PMI, consumer confidence. A lot going on there. As I said, Wednesday, ADP, ISM, and FOMC rates in the U.S., PMI manufacturing in Europe. Thursday, we get the Bank of England's rate decision, durable goods and factory orders, and on Friday we have services PMI across Europe and the U.S. and non-farm payrolls. It's 7:30 Central, 8:30 Eastern. So again, this week is a bit loaded. So that's where we stand. Not sure if there is jitter on the line or not. Some of you are saying yes, some of you are saying no. Seems to come across clearly. I'd have to look at it a little bit later rather than be distracted by it right now. As long as you can somewhat hear me, we're good. Here's where we are. Here's where we were on Friday. The primary scenario was for the market to pull back a little bit towards the Thursday point of control and then start to squeeze up. That did not happen. That was the key scenario. The key scenario was really queuing off of the impulsive move right here on Wednesday. So Thursday was a rest day, flag, and then looking for a continuation on Friday. That did not happen. That was the primary scenario, and it didn't go. What did go is the secondary scenario. Which actually pushed a lot farther than I expected. I expected an open auction on the open, then the start of a break lower, below the prior day's range, and with an impulse down, get down into the 24 area. We ended up pushing down into the 2808. Let's see, I think the low is 2808.75, a lot farther than I expected. The range on Friday was also a lot wider than expected. Friday's close was down 24.75 points. As I looked around to see what the issue was, it seemed like there was rumor of a government shutdown before the announcement was made by the U.S. president himself on Twitter. So that basically put us in a risk-off situation, and so we were selling in equities and buying in risk assets, lower risk assets. So scenario 2 is what worked out. Here's what it looked like. Now this chart's going to look awful noisy because there was so much rotation on Friday. I don't want to change the periodicity, but here you have your opening auction. We opened just on the edge of value from Thursday in range. So the very high expectation of a touch of the point of control, which we did. And that was basically the opening swing low at 28.39. And then we extended. So this is the opening swing low right here, this dashed blue line. Okay. So this is the entire opening swing. If I put an arrowhead at the top, you'll have the dashed blue line at the top, dashed blue line at the bottom. That's the entire opening swing. So what does that mean? It means that as the market opened, the first rush of orders, the market on open orders, the first rush of orders, that's what they did. They set a boundary. We try to identify the high, not based on time, but based on a price swing. And the market immediately put in a swing at 28.43 1/4 and to 28.39 before it finally breached to the downside to pull back, consolidated at the prior day's low of 28.33 1/2. It got to 28.34, then 28.34 1/4, but couldn't get back to the mid or VWAP before it actually extended the range down. So now what does that say? In real time, that basically says you have sellers that are likely to be in control, so trade from the short side. Okay, so as we move out of the prior day's range, it becomes more and more risky. There's still pretty good opportunity to take an outside-in trade given the opening type. But as we move out of a balanced day's low or a balanced day's range, it gets dangerous because balance leads to imbalance, and we tend to tip over after we've been imbalanced, like you see here. And so the best opportunity I saw on Friday was the pullback and failure twice on the IB low on the prior day's range. The buyers just could not raise price through the prior day's low and the initial balance low and hold it. And so what you have is buyers who are likely to be weak hands, and boom, it goes. There's the impulse down, and it ran through a lot of stock zones, the key of which is 28.18, which was right in here, 28.18. The reason 28.18 was important, I'll show you. Let me pull up my chart finder here. The reason 28.18 is important, let's look back at the composite. Here's where we consolidated forever, push up to 27.96, come back to 27.48 and through 26.93. Then we pushed up. We have this gap right here, We have this gap zone, and then we pushed up and we balanced. Look at the high, 28.18 and a quarter. This was actually also the low. This was actually also the low of the gap zone from way back. So 28.18 is the high of this composite zone right here, this balancing zone. Let's get rid of this. This is no longer relevant. And then we broke higher. We broke higher in an impulse right here, balanced, and we can expected a continuation. Didn't get it. Instead, on Friday, we get a sell-off. So that's a selling bar right there, 28.18. 28.18 was the point at which it rotated down, the point at which it was expected to get support. And where does that come from? On the profile itself. So let's pull in the profile. Okay, so there's that little gap right there. There's the little gap, and there's the low volume node. So the 28.18 was a key low volume node in the area and a former gap. It's actually almost a gap zone mid. I think it was 28.1875 before it was filled. So my point is, there was just nothing holding this thing back. Expected a bounce at 28.18 for mid, a test, short expectation off of the mid for a higher low that might finish just outside the range. Instead, it pushed all the way down to 28.0875, and it ended up consolidating with a point of control sitting at the lower end of the range into the close. Point of controls outside of the IB, outside of the below the point of control the last few days. We have a trend day profile on Friday. So you see these distributions. This is a trend day. This is basically saying we don't agree on price. We don't agree on price. We don't agree on price. We have some agreement on price here, but they've tested so many price ranges. Whereas here you have a consensus. You have a market that is tapering at the top, tapering somewhat at the bottom, and is accepting this price here as the most traded price. And you have consensus and balance. And this is the market's natural condition, kind of like water. You know, when water finds its equilibrium with atmospheric pressure, it just sits, right? And when something changes, the slope changes or whatever, it starts to move. And the market's constantly seeking that same balance, that same equilibrium. And Friday turned out to be a long liquidation type profile, a B-shaped profile with a trend day shape overall. So the overnight high brings us back. So the entire overnight session. Let's get into that now to see what the narrative has been. So the narrative on Friday is very clear. Here's the overnight session, or the extended hours, I should call it. So we open in a small gap between Friday's close and today's open, and we're not able to come back to the Friday close. It looks to me, it looks to be very heavy. If you watch the reopen, you would have seen it. It seemed very heavy. A test of mid, extend Friday's impulse down, and then once the Europeans got in, right here, once the Europeans got in, it took on a buying trend up. So we're in a channel on the way up on the overnight with pretty good volume. The volume, it's also right here. The volume's listed right here. The volume's 138,000, higher than 110,000 mode or common for this product on the extended hours. So pretty good activity on the volume. And we have a profile that's somewhat trying to balance, but really still seeking value. And so we are opening right on top of Friday's close. So the shape that we're looking at here which is not valid until it's tested during the day session, according to my perspective, my way of looking at the market. So we have an impulse down, a pullback that was really far from mid on Friday, and then you have the continuation move. And so now we expect a flag and correction. Okay. No, that's not really what I'm not saying that that's what's most likely, because this is happening overnight. So today, what we have is a market that's basically saying, you know what, we checked below Friday's low, 2808.75, but we checked that in sympathy with other indices. We didn't check it in terms of the underlying stocks, the 500 stocks that are in the S&P, because you know what, they weren't trading on Friday night. So we have to understand that there's a fair amount of participation on Friday, given the volume and given the range 12 points. There's quite a bit going on at the high, so it seems to be inventory was mostly to the short side, now is balanced. So what this is saying coming into today is it's not saying anything. It's basically saying we've got participants coming right back to where we finished on Friday. And therefore, this is one of those mornings where we're opening against the point of control, against the close. We're opening right in here against the prior day's close, which is right there. I think it's 28.17.5 or something like that. Let's see. The close was 28.17.5. Look at that. Just remembering. Lots of junk in my head. And so what we have to do today is to wait to find out if there is a continuation move to extend this impulse down. Is this impulse meaningful, or is this a news-based event that is likely to be taken back? If it's meaningful, in other words, if it's technical or if it's part of the auction, we expect the market to retest this low and poke through. So the overnight low. And then we get a decision on what happens next. Do we find buyers down here and it's too cheap? And so we are likely to float all the way back up. And the area that is key up here is 35. Excuse me. Or do we drop and then we get more volume, more negative delta that pushes us through? And what that does is it puts us right back in this microcomposite here, of which you see the dashed outline, the dashed yellow outline, the microcomposite that has a 2818 high from the composite chart that I showed. Now, if we push through and we hold that below that 2818, well, guess what? The next area, the next key price to test lower is 2803, the point of control. Right there, the point of control. We're back at the 2800 century figure, and we could push as far as 2793 if we do get below there, and that's how the market is set up currently. So what do we do with today's information? Expecting an open auction. Why an open auction? We are in range, right on top of the point of control, which is not really balanced or anything, and prior day's close. So unfortunately today it could go either way. You have an equal opportunity for it to continue lower, to push the impulse down and test this 2803, bounce up, consolidate, retest this 2800, poke through, find out what's below 2800, and finish back up like it often has on a test of 2800. That's your primary scenario. The secondary is the opposite, and that's why we have to see which side has the ball, has the power. So in this case, we start to become responsive and we start to push up into these low volume node areas. So that's where the stock zones are. 28.25, consolidate, push through 28.30, consolidate, and then ultimately 28.35 is the key area. So today does not have many catalysts other than, let's see, tariffs, the president's economic advisor Kudlow showing up on TV consistently and talking about how they want to work out an energy and grain tariff agreement, trade agreement with Europe. So we have tariffs, but we also have this government shutdown looming. So government shutdowns, in my 18 years of experience, tend to have a strong negative reaction initially, but the market tends to start to kind of ignore them over time. It's kind of interesting. As the saga moves on, the market tends to discount the shutdown and its economic impact. So we'll see how this one works out. There's likely to be a lot of controversy here because the thing that is being blamed for a government shutdown by the White House administration is Democrats standing in the way of building a wall along the Mexican border, which supposedly Mexico's going to pay for, but now he wants the budget to come out of Congress. And so that's going to be a tough battle, and there's going to be probably a lot of rhetoric. So just, I'm not making political commentary here. It just means that there's going to be a lot coming in through your news feed, whatever that is. And there may be some erratic behavior as we push into this shutdown thing, right? And once we get through the summer, by the way, if you don't know, once we get through the summer, we have midterm elections here in the U.S. in November, which can determine who controls which parts of Congress. So does power move from Republicans to Democrats, in which case the president will have to deal with executive orders to get things done. Does the House of Representatives turn Democratic? There's a lot at play here. There's a lot at stake for both parties, and we're going to go right into that from September through November. Those 2 months are going to be pretty intense news-wise. So just have those kind of milestones in mind as you're looking at the macro picture. I don't trade macro, but I'm a day trader, but it's just important to know what could impact the sentiment of the higher players, the bigger players, participants in the market, which do create the trends or the balance zones, depending on what we're getting. Remember, Wednesday, FOMC, Friday, non-farm payrolls. Those are your big days this week. Another thing to note, I'm going to be gone next week, taking my annual trip overseas from Sunday to Sunday. So there will not be any Trader Bites next week. Okay, good luck today.